Let's bring in Sarah Robak, contributor for the TD Ameritrade Network. We're going to take a look at Domino's. The stock rebounding today, had the earnings miss, cut its long-term sales outlook, but then there was a conference call where they announced a buyback, and I saw the stock went from negative into positive. Do you think that's what turned this around? Because it's a pretty interesting report.
I think that definitely has to be one of the catalysts, Nicole. Good afternoon. Shares of Domino's trading up over 4% today, despite this lackluster earnings report where they literally missed on most, if not all, of their important numbers. Their earnings per share came in at $2.05 versus the $2.07 that was expected. Revenue fell slightly short as well. Same-store sales came in at 2.4% growth for the quarter versus the 2.8% that was expected, and it's actually the slowest same-store sales growth that we've seen from this company since 2012. And the company is experiencing some significant headwinds as it relates to the ramped up competition in the food delivery space. When you think of the Grubhub, the DoorDash, Uber Eats, etc., they also updated their outlook for the next 2 to 3 years lower, saying that revenues would come in at 7 to 10% sales growth over the next 2 to 3 years, when they were originally anticipating 8 to 12%. And they also revised their same-store sales growth estimates going forward for the next 2 to 3 years as well. But as you mentioned, they came out fresh announcing this $1 billion share buyback program. We also had an analyst at Stephens coming out and reiterating their buy rating on this stock with a $300 price target, saying that he believes in the long-term potential for this stock and their competitive advantage.
Well, that's some good news for the long term. Some of those numbers in the report, though, I mean, they couldn't win. They couldn't win on the earnings. They didn't win on the sales. They didn't win on the outlook. I mean, it was just a tough quarter, and the competition is stiff, no doubt. What about good old Levi Strauss, set to post quarterly results after today's market close? I loved it. I loved when they had the IPO earlier this year. I mean, obviously, it's an exciting, great American company from so many years back.
Yeah, so Levi IPO'd at a $17 IPO price back in March, and they're still holding on to some gains. They're trading up about 14% from that IPO price, but investors were disappointed with their last report, Nicole. Although they did beat on both the top and bottom line, they missed the consensus estimates on their gross profit margin. It fell about 1.5% lower than the estimates. They also mentioned in their outlook that they're experiencing some softness in their wholesale business, which is about 2/3 of their revenues. They're experiencing softness, particularly in the U.S., because of retailers closing stores or going bankrupt. And they just called out that the wholesale market overall is very soft and is going to impact them in the second half of the year. But as I mentioned, it's 2/3 of their business. They have been trying to offset that by ramping up their direct-to-consumer business. And we saw 9% growth this last quarter. I think investors are going to want to continue to see that momentum, but earnings per share expected to come in at 27 cents for the quarter on revenues of about $1.4 billion. Just a couple other quick things to look at. They've been trying to diversify out of just men's jeans and diversify or expand into women's clothing and outerwear and tops, and we're definitely seeing some traction on that front. And international growth is also something that they've been focused on. Most of their sales expansion has been coming from Europe and Asia, so I think that's another thing that investors are going to keep their eye on in this report.
Well, I saw some cute millennials on the street all wearing Levi's the other day, so that should tell you something. I mean, but it's not fintech, it's not fitness tech, it's not services, it's not in-store experiences. It's just good old Levi's. So I hope that they can make it work. Sarah Robak, great to see you, contributor for the TD Ameritrade Network. Thank you, Sarah.